Welcome to the weekly swing low. It's June 21st, 2025. We had our Fed meeting this week, and so that catalyst is out of the way. We just completed week 10. The market is in a bit of a holding pattern here. We do have a swing high on the daily chart. That's important to note. And so we may have started the daily cycle decline. Let's talk about it. We'll start with SPY here, SPY. And so you can see on this weekly chart, the last 2 weeks have been red, but very small in terms of range. And we haven't really made a lower low. So the last green week we have is that week of June 2nd, so the first week of June. And that candle has a range. The high is 599 and the low is 583. So a pretty big candle in terms of range. These next 2 weeks have just been on the upper end of that range. And so right now, that low for over the last 2 weeks was is $592.86. So still well above that low from the first week of June. And so that's the level that we want to watch here. Like we want to watch, do we close sustainably below? So let's say next week we get something like this, right? Because it seems like we're probably getting the week daily cycle decline. And so now the real question is this also the weekly cycle decline as well? And so the low last week, so again, is that level is $592.86. If we close below that, that means we have a weekly swing high in place now. And that is really troublesome on week 10. What you want to watch for is a move below that level and then a recapture. Again, not to belabor the point, but that would be a false breakdown, as we talk a lot about on this channel. And so on the daily chart, I talked about how we have a swing high in place. So Wednesday, June 11th, we made the high of the cycle, of the daily cycle. That's still not a new all-time high yet. And that high was at $603.28. That candle made a low at $597.50. And so we now find ourselves below that candle by a few bucks, right? What is that? Like $2 or $3. And so you can see this red line here very clearly drawn. First step is to get back above that line to show that we're not actually in a downtrend. Otherwise, this is just the beginning of a downtrend on the daily chart. You can see this low here from Friday is slightly lower than this low here, the last low that we were kind of staying above. In terms of the cycle count, that high came on day 12 and Friday was day 18. So this is important. Even if we're going to make a new high for this daily cycle, so above this high from day 12, we're already on day 18. Now, the previous weekly daily cycle rallied for 29 days, which is longer than usual. The one before that was very bearish. That's the one that dropped into the April 7th low. That was just an 8-day rally. So we've obviously gotten a rally longer than that already. The one before that was 25 days. The one before that was 23. The one before that, 29. The one before that, 19. All that to say, even if we're going to get a new high, we're still getting late in the daily cycle. So we're probably, like, if this isn't the daily cycle decline now, and we're actually going to run up and make a new high, we're probably going to drop into the daily cycle low shortly after that anyway. So there's probably not a lot of upside left before we get that daily cycle low. So the bullish case is actually that we've started the daily cycle decline and we're going to complete it maybe the end of this week, maybe the week after that, and then we start a new rally. And most importantly, that we maintain the bullish structure on this weekly chart. Again, that means staying above or recapturing call it $593 in that neighborhood. So you don't want to see price go much lower than that. And so that's SPY. We've got very similar action on the other indices, just different levels. So we'll talk through those. And in terms of the daily chart, just to be clear, so the low for the day is that same low for the week, the $592.86. The high from Friday was $599.46. So a move above that is a big go signal. I mean, you could have actually go sooner than that. You can look for a swing low on a lower time frame, but this would be super bullish, right? Because this is already a false breakdown of this low, and so once we can clear that, that gives you energy. You generally want to enter after a trap has already been set, and so this could be that trap right there. And if you go back to the monthly chart, just thinking about the big picture, zooming out, we're just this is 1 month of follow through off of the May low, that the May swing low. And so a lot of stuff could happen and this structure still stays completely bullish. So keep that in mind. Zoom out when you need to. The other thing I would point out is we're we are running out of time to close out this quarterly candle. And so my expectation was that we were going to get a bullish outside quarterly candle. We may run out of time to do that. And so I would think that we get a compound bullish outside candle on the quarterly chart. So these two candles, so that means the next quarterly candle, so the next 3 months, so July, August, September, end up making a higher high, and those two candles combined are a bullish outside candle of these previous quarterly candles. You have to recognize these patterns, especially when they appear on the highest, on the higher time frames. So very bullish stuff on the higher time frames. You just have to watch the lower time frames. We have to, like, what we're watching for is that this is a relatively gentle daily cycle decline and that we're still rallying in the weekly cycle. If we're not rallying in the weekly cycle, that's also not the end of the world either. Imagine a world where we come down, take out this gap, right? Like this gap happened on a Monday, which is why it appears on the weekly chart as well. So imagine a candle that closes somewhere like that. That could be a super bullish. I mean, you think about this weekly, like think about this structure. There is nothing wrong with that, right? Like that just means that's like you just think about this as something like that, like boom, and then a retrace down here, and then off to all-time highs, right? Like price discovery. So keep that in mind. Many different scenarios that could play out, but I think I would expect surprises to come to the upside. All right, let's move on to the other indices. We'll go through them quicker now. So QQQ actually formed a bearish outside candle on Friday. SPY came close to doing that, but QQQ actually did print one. So the low there is $524.88. Be aware of that. A close below that is bad news. It's all the same thing though. The QQQ made a high on June 11th, just like SPY did. All the indices did. So the swing high is active below, the daily swing high is active below $530.11. So you want to cross back above that. Once you cross back above that, you're no longer beneath a swing high on the daily chart, and you're no longer at risk of a downtrend on the daily chart, is the way to think about it. And you can see same picture for QQQ as SPY. Last 2 weeks have been ugly red candles, but they're in the upper end of the range on this weekly chart. And so you just have to watch for the structure on this chart. Same idea. There's a big gap below. For QQQ, that gap is below $501.48 and $492.70. So a pretty sizable gap. It's a pretty big gap for SPY as well. And I will note that for SPY, just going back to SPY really quickly. SPY kind of like threatened to fill that gap. Like look at this candle here. This is where we got our daily cycle low from the last cycle, right? On day 33, that was May 23rd. We came down here, threatened to fill the gap, didn't quite do it. Let's see, what did SPY? So interesting. Yeah, QQQ actually didn't come nearly as close. So you can see for Qs, the gap starts from here to here. So it didn't even enter the gap, whereas SPY entered the gap but didn't close it. I think it's a good way to think about it. And if we look at the ratio chart, QQQ also formed a bearish outside candle versus SPY, like on the ratio chart, all what we would expect as part of a pullback. If we look at DIA, the ticker for the Dow, so that also another red day on Friday. The low there is $420.72. You can kind of see this is acting like a little bit of a shelf. So in this case, it didn't make a lower low, like it's not a false breakdown, but it still got really close. And so that's your line in the sand, very clear. And for DIA, that swing high is active below $426.96. So call it $427. And on the weekly chart, again, not to belabor the point, all these structures look very similar. I'll get rid of this so it's easier to see. I would say the difference here, though, is that on the weekly chart, the Dow is more like in the middle to lower end of the range, like in terms of where it's consolidating, whereas SPY and QQQ are at the upper end of the range. So that's important to note. IWM, moving on to IWM. So the low for IWM you want to stay above on the daily chart is $207.78. As long as it stays below $212.71, that is a daily swing high in place, and potentially that's your daily cycle high, and it means we're in daily cycle decline. For the Qs, we're definitely at the lower end of the range on the weekly chart, and that level you want to guard against is $207.65. A close below that, so again, just showing what that would kind of look like visually. That would be kind of bad news bears, right? You want to kind of avoid that look kind of thing for next week. So that's IWM. And the ratio of IWM to SPY is still holding a swing low. And look at the monthly chart. We have a green month so far for June, whereas we've had red months. Basically, literally all of 2025 has been red months and making lower lows. So IWM is holding up relative to SPY. That's important. When we get that swing low, when we get a clear end to this decline that we're in the overall markets, IWM, small caps might be the one that you want to, the horse that you might want to ride. Let's move on to SMH, small caps. So small caps, a little bit of a different picture. Look at this weekly chart. The last two weekly candles actually made higher highs, but they're still not super bullish. They did end up being green. Last week, this week that just concluded was just a doji, right? That range is a high at $265.53 and a low at $257.22. So you want to watch that range. What side of it is it going to break? Because it's probably going to open as an inside week. And on the daily chart, you have a red candle, but a nice little up lower wick, which means we had a little rally to end the day probably. That low is at $257.22 we talked about. So it makes your levels kind of clear. If we zoom into a 15-minute chart, let's see, is there an actionable? All right, so we're kind of bear flagging on the 15-minute chart. You can see this waterfall decline on the 15-minute chart, and then we're trying to bounce. We have a really clear structure here. So we're in a range between $260.83 and $258.61. I mean, you can see it kind of clear as day. I'll just draw it here just to be super clear here, right? You can see here to here, something like that, right? We'll clone this thing, right? Let's see what side, where is it going to break out of this? That's your micro 15-minute chart if you're trading on those kinds of time frames. So that's SMH. Let's move on to Dixie. So Dixie is declining in the weekly cycle, but it's taking its time. This is week 8, or we just finished week 8, I should say. It was a green week, actually, and an inside week. So we stayed inside the range of the previous week, which was a high of $99.39 and a low at $97.6. And so what side of that range do we break out of? That's all that really matters here. But it was week 8 of a weekly cycle decline, so I would expect we're building some structure here that we're eventually going to break down below. And if we look at the daily chart, that means, okay, looks like we just got a little daily cycle low. So that low, what is that? 97.6. So we just finished day 6. So that's important, right? Because we would expect that this rally is going to be short-lived, and we already have a little high here. It's entirely possible that this was our, Thursday, it's possible that Thursday was actually our daily cycle high for Dixie. So that would be a close below 98.75. So if we close below 98.75, we have a swing high on the daily chart and possible daily cycle high, which means we start the daily cycle decline, which means this weekly cycle decline continues because we're only on week 8. The previous weekly cycle bottomed on week 30. The one before that was actually really short at 16 weeks. Sometimes you get these really short, shallow ones, or I should say short, sharp ones, the opposite, right? Look at this, right? I mean, this was a long one, but also pretty deep. And so I'd be surprised if this is some kind of low here on week 8, as opposed to it being the middle of the downtrend, like a pause. So that's Dixie. And bigger picture, we're on what appears to be month 23 of this longer term cycle, right? Like a cycle that potentially topped out on month 18. Not to mention, this whole period was super bearish. We had this period of just ugly chop, and then this pop that was short lived, and now we're collapsing. So not only are we early in a weekly cycle decline, it looks like we're relatively early in a long-term cycle decline, right? Like we topped out only a few months ago, and you would expect that this is going to be left translated. So we rallied for 18 months. You would expect that we decline for at least another 18 months. And so if that was what played out, we wouldn't get a low until next July. So July 2026. That's not a prediction by any means. It's just something that you wouldn't be surprised to see, like something I'm kind of expecting, and unless I see some strong evidence to the contrary. But you'll take it, we'll take it one weekly cycle at a time. Obviously, there's a lot of weekly cycles between now and the end of like July of next year. So that's Dixie. The 10-year Treasury yield that has decoupled from Dixie. We've been talking about this. That is on week so it just completed week 11, but we're doing nothing but consolidating. In fact, the last 4 weeks have just been inside the range at 4.54 and a low of 4.32. And that is within a larger range that's really just this big green candle that formed the swing low that formed the weekly cycle advance. And so this is all just consolidation, nothing more really. So that's the 10-year Treasury yield. Let's look at oil. So oil is holding a little swing low on the monthly chart. That's important if it can close above $64.14. On the weekly, though, the gotcha part is we are already on week 11, and this was an inside week. So we probably don't have much time left in the weekly cycle rally. But last week was an inside week anyway. Be aware of that. The high is $77.57, the low at $64.22. So obviously a pretty gigantic range. And last week's candle also finished with pretty massive wick as well. So I would expect we get an inside candle to start the week, and then we see which side of the range we want to break. And that range would be the high at $75.70 and the low at $67.88. I wouldn't be surprised if we just see another week of consolidation where we don't break that range, where it's just still trying to kind of make a decision as we have the tensions in the Middle East and all that. So that's oil. TLT, so this is yields. This will be going inverse to yields. And so TLT, like let's go to the weekly first. So we have this weekly swing low here on week 18. And that is active as long as we stay above $85.80. And we've done that for the last 4 weeks, basically. And we're now closing above the 10-week moving average. It's entirely possible that this is actually an early weekly cycle low, right? Like this was a weekly cycle low in week 38. The one before that was week 26. The one before that was week 34. This tends to have longer weekly cycles. So a low on week 18 would be really early, but stranger things have happened, right? And as long as we stay above 85.80, that weekly swing like low is in place, and this is possibly a new weekly cycle. And the catch is, it doesn't have to be a bullish weekly cycle. We could spend some time consolidating slash rallying a little bit here, and then go on to make a lower low below the low here, which is 82.99. So it doesn't mean this is bullish long term. It just means this isn't where I would get short necessarily, for example. Uh, that's a TLT, and TBT is doing the opposite, which is what you would expect. For this one, you want to see a close above $37.60 on the weekly chart. That will mean that this is a little higher low, and basically it would be the opposite of what you see on TLT, right? That like TLT will start its decline, and this would start its rally. So that's a move above $37.60 for TBT is what we need to see. All right, let's look at Bitcoin and then precious metals to close this out. So Bitcoin, similar to the index to the broader market, probably, or I should say, in this case, interesting, right? Because this is relatively early in a new weekly cycle or daily cycle, excuse me. This is day 16 right now. We have this top here so far. It would be incredibly bullish if this were the top. That's not my expectation. At this point, this could still be a retrace that holds this low. Now the catch is maybe it doesn't hold the low. Maybe it breaks below that low and then recaptures. Like, this thing isn't going to follow a textbook, right? But right now, the state of play is yesterday we had a bearish outside daily candle. That was Friday. So that high is $106,553, and the low is $102,357. So very simple. We got to stay above that $102,357 level. If we can't, we're probably going to go back and retest this low right above 100,000. And then, of course, you have that big round psychological number of 100,000. See if that holds. On the weekly, that puts us at week 10. So we so far have a high on week, what is that? Week 6. So that's important to note. So far, high on week 6, but we do not have a weekly swing high in place. That's also very important. Be it to be objective, have very specific levels. So we would need to close below 102,105 to have a weekly swing low in place. That is super important because you literally can't have a weekly cycle decline without a weekly swing low yet. So that becomes a critically important level. And again, not to belabor the point, but a beautiful, like imagine a candle that goes deep red and then we get a massive wick, right? Like so it doesn't close below here, but at some point it was way below here, and then we get a nice wick, right? Like similar to like a wick like this or like this thing, which obviously we came back and made a lower low, right? Like look at this pattern, right? You're like, oh wow, we're out of the woods, right? No, we're not. We came back and made this lower low. That would be a really, really nice entry here. The bullish, the bearish case is that this is your weekly cycle high here on week 6, and we're just continuing to decline. We'll know based on what we see from this daily cycle, obviously. And if we look at ETH, very similar picture, just different levels. So for ETH, it's really got to stay above 2,300. Call it 2,300 even. Look at this shelf here. It's got to stay above that shelf. Because all of this is consolidation at the upper end of the range off of this big move here. And if we look at the ETH to BTC ratio, you're seeing a similar thing in terms of consolidation. Look at this weekly chart. It's just been consolidating the last 6 weeks versus Bitcoin. So, and on the monthly chart, we have this big monthly swing low in place. Right now, price is coming back to kind of test it. We're going to have to see. This is where the rubber kind of hits the road. This is a ratio chart, obviously, so not the absolute chart, but an important one to watch. I'll also go back and say for Bitcoin, very important, just to kind of see how price action plays out. Look at this candle here on the daily chart going all the way back to May. We had this candle here, this bearish outside candle, which then price kind of bounced around inside the range of this candle. Notice what happened. Notice where we are right now. We're right back inside that range, right? If you go all the way back to this candle. Also important to note, right? We have this swing high in place here, right? So that is below 109,217. We need to cross, that's the swing high from the all-time high, right? Like this is a daily chart. This is the day that Bitcoin made that new all-time high at 112,000. That same day, it had a low of 109,217. So that becomes your line in the sand. If we close below that, that's a daily swing high. In fact, we closed below that the very next day, right? Price then tried to rally back and then bumped its head on resistance, made a lower low, another lower high, another lower low. Notice where price came back here, right? Like look at where this wick stopped, right? Right below this swing high. That's an important level. It's quite a distance above at this point, that 109,217. But that's just an illustration of how important these swing high levels are. And it doesn't mean price is going to retest that level exactly. In this case, look at that. It ran out of steam. These become really important levels to keep in mind. So this is going to be important, this swing here. Like, right, like is price going to be able to get back here? On the very short term, on the daily chart, you just have to get back above this wick, right? $104,013. That becomes your big line in the sand. You need to see a candle do something like this on the daily to get things started. And of course, you'll see that on lower time frames first, right? It'll have to happen on a 4-hour chart before 1 hour, etc. So that is crypto. Finally, let's do gold, silver, and then we'll also look at uranium really quickly because that is emerging from a long-term cycle low, I suspect, and it's going to be it's probably going to present a buying opportunity soon. So this is gold. So gold has, I think at this point it's safe to say we are in a new weekly cycle. We just completed week 5. This would be our weekly cycle low here after a top on week 16. We're not making a ton of progress. Importantly, this was a red week, and but we're still inside the range of this green week from June 9th. And so the low from this week is 3,294, call it, right? So that becomes an important kind of line in the sand. And if you look at the daily chart, right, this was a daily cycle low here. And so this started a new daily cycle. I suspect this might be our daily cycle high here on day 21. And so that would put us on day 24. So short story is we're probably experiencing a daily cycle decline. It's probably going to be shallow enough that it doesn't damage this weekly chart much, right? Like imagine a world where we just get back into this range, right? Like maybe we make a false breakdown of this level of that 23, excuse me, that 3294, 3290s in that area, right? Like imagine a candle that does something like that, right? Scares people, but all it really is consolidation, right? Like we're just still inside this big range. If we look at GDX, it's showing more clearly. We already made a higher high above this previous high, right? Like remember, gold did not. Gold is still below that high from week 16. Miners are showing you that they have started a new weekly cycle. The catch is we're also a red week for miners, also inside, and this is week 6. I'll update that. And for miners, that level is a high at $51.12. Or excuse me, a low at $51.12 and a high at $54.70. So we'll see which side of the range we want to break. Again, very, very likely we do break that range. Probably don't close there. Probably end up getting some wick action. But this is relatively early in a new weekly cycle. Or excuse me, this is actually week 5. I was thinking about a different chart. So that's miners. And then finally, we'll look at silver, like to close out the precious. Actually, we'll look at platinum as well. So we'll look at platinum. So let's look at silver. So silver, big upper wick on this weekly candle, but also a lower wick. So really just a doji. So we would expect an inside week next week. I expect we do get a lower low below this. So the range is a high at $37.31 and a low at $35.52. So I wouldn't be surprised if we get something, we get some kind of candle that breaks that low of that range. So something like this. Maybe we don't close there. Maybe we get, but look at how this is just consolidation at the upper end of the range of this candle. You probably heard that phrase a few times here. That's a theme, right? This is consolidation, probably setting up a buying opportunity across a lot of assets. So that's silver. On the daily chart, we have this little lower wick here on the daily. So that's a low at $35.52. So watch for that. I think that also probably that's close to where the weekly low is as well. And for platinum, we just formed the swing high, and this is coming right in the timing band of where you would expect a daily cycle high. So it's day 48. That's a really long rally. Closed below $1,254 in that well, so we didn't quite close there, but that would form your daily swing high and potentially start your daily cycle decline. And if we look at the weekly, we're on week 10. So it doesn't have to be a weekly cycle high by any means. If you think about the structure of this chart, we would need this pullback to hold above or in the 1161 neighborhood. Like again, imagine a candle that does something like this. That would be perfectly healthy, right? Like this is a move up and then a little lower, higher low, and then back up. So that nothing wrong with that. And then finally, let's look at uranium and natural gas. So we'll look at a couple of uranium names. Lots of different ways to play this. So CCJ is one way. If you look at the monthly chart, this, that April 7th low looks like a long-term low, like many assets. By crossing above 45.98, so call it $46, that set a monthly swing low, and then we're off to the races, looking really, really bullish here. But short term, we are on week 10 of the weekly cycle. We have a shooter candle. The low from that candle is $67.76. That sets a really clear line in the sand. It's very likely we're starting the weekly cycle decline here, but it's probably going to be shallow and it's going to set up a buying opportunity. But notice how far above the 10-week moving average we are. So price could come back a lot and it still could be perfectly healthy, just kind of catching its breath. But first step would be a close below $67.76. And that would mean we're also in daily cycle decline. And that's even clearer. You can see the daily cycle, the daily swing low is active below $68.27. Oh, that's crazy. We closed right there. That's so interesting. We closed literally to the penny at exactly where we would need to be below. All that to say, we actually don't have a daily swing low in place yet. We would need to drop by another penny for that to be the case. But my expectation would be this is a daily cycle high. We're starting the daily cycle decline, which is probably also a weekly cycle decline. In terms of levels to look for below, there is a gap between, call it 62.59 and 60.54. So very possible price gets at least to the top of the gap, if not filling it all the way before we get our daily cycle decline. So that could set up a really nice buying opportunity. That CCJ, it's a very similar picture for all of these, just different levels. For the ETF URNM, that weekly level is $45.21. A close below that is a weekly swing high. And for that one, the daily swing high is active below $45.36. There's also a gap there. This one looks like it's headed to that level. That's URNM. URA, weekly level, weekly swing high, active below $36.70. We already have a daily swing high in place because it closed below $37.38. This actually looks like the weakest of the three that I just looked at. So that's important to kind of to note. But the big picture is we're probably setting up a buying opportunity. URA, by the way, is, I mean, look at this chart, man. This thing is like, this is incredibly bullish. If you like, so this is one I would be watching closely for your entry. And finally, we will look at natural gas. So natural gas closed with a daily swing high, a daily swing high and bullish, daily bearish outside candle. So that's a big red candle with a range that was a high at $4.07 and a low at $3.75. So very clear line in the sand. On your weekly chart, it looks like we're on week 8. So big important implications here, right? Like, is this the middle of the weekly cycle advance and we're still going to make a higher high, or did we just top out here? The low for this weekly candle is $3.52. A close below that would create a weekly swing high, and that would literally be the first step you need. And this has not been a very favorable weekly cycle, by the way. It's just been a lot of consolidation and kind of wasted time. So a little frustrating, to be honest. That is the picture for natural gas, and those are all the tickers. So in general, markets are pulling back, setting up buying opportunities, but there actually are a lot of nice individual names as well. I'll do a separate video on that for paid subscribers. We'll talk about different sectors. There's a lot of stuff emerging from long-term, what's probably a long-term bottom. A lot of, especially once we come out of this pullback, there's a lot of stuff that's like ready to run. So more to come on that. But thanks for watching.